we'll start this question. Right, I have sent you 7 questions. Right, out of those 7 questions, I hope now you would have done all those questions. Right, we'll try to work out this question, these 7 questions in the screen. Right, so here, as I told you, this financial final accounts question, you'll have to read. The first step is you'll have to read the question properly, and you will have to. So the second step is you will have to see what is asked by the examiner for you to do. Right here in this question, the trade in profit and loss account and the balance sheet. Right. So therefore, so those are the two questions. Right. Hello. Hello, can you hear me? Can you hear me, please?
Yes, sir.
Right. Okay. Can you write down my mobile number? Right. If you have any problem, please you can give a call to even to my mobile. Right. So then, if you can't just communicate with me here, I'll write down on the screen. Right. If you can't hear me, right, and if you can't communicate with me through this internet, you can call me on this number 07777 You can, if anybody can't hear me, or if there's any problem to somebody, please please give a call to me on this number. Okay, right. So then in this question, it is asked to prepare the trading profit and loss account and balance sheet, and then you read the once you read the question, you might see stock is there, depreciation, there is a goods in transit, and owner has taken some goods for his personal use. Provisions are to be made, bad debts, those are the things, right? And you are asked to prepare the 07777448537. Okay, so you can call at any time. So we are asked to prepare the trading right. Rupees is better to have 3 columns, right? Then first one is it is said there is a closing stock of 96,800, right? So that means the sales. Are there any sales return? You'll have to read the trial balance. Are there any sales returns? No sales return, right? Then cost of sale. Cost of sale is opening stocks. Opening stock is 203,500. 203,500. Purchases. Opening stock is 203,500. We'll put that in the second column. Right. Two hundred 3,500. Then the purchases is given in the trial balance. 134,340. Then there are some adjustments to the purchases. There is carriage inward. Carriage inward is 6,000. Carriage. You have to understand this. Carriage inward means the purchase. Carriage inward is relevant to the purchases. Carriage outward is relevant to the sales. So that means carriage outward. So we are carrying the things to outside. That is for the sales, right? Therefore, you'll have to take the carriage inward. These are the mistakes that the students are doing, right? Always carriage inward is relevant to the purchases, carriage outward is relevant to the sales. Okay. Then we'll have to add this 6,000. And in the question, it says, Mr. Silla has taken 40,000 good for his personal use. So therefore, drawings. 40,000. Right. So therefore, this is the net purchases. Net purchases. Thousand 306, 1,306,000. So then we can add to this. Then we get this one. From this, we will have to deduct the closing stocks. Closing stocks. Then the stocks, this one we closing stock is 96,800. 96,800 is the closing stocks. So therefore, from this, we can deduct closing stock 96,800, right? But at the same time, it is given in the question, I think, goods for the value of rupees 5,000 were in transit, right? Goods in transit, 5,000. So therefore, closing stock is not really this one, right? This one plus goods in transit. That means they have ordered, but that has not been received to the stores yet. That is 5,000. Right? So therefore, real closing stock is 101,800. That's the real closing stocks. Then we get the cost of sale. $1,407,700. This is the cost of sale, right? And the sales is given. Sales is no adjustment for the sales, I suppose. This much is the sales. Then the gross profit is no cost of sale we'll have to take here. Then it's easy. $1,407,700. Then the cost of sale is, so the gross profit is sales minus cost of sale. We get a gross profit of 1,474,680. I hope everybody has got that. Right. You have got the, is there anything that you will have to ask? Right. You all can hear me now? Why I am asking whether you all can hear me frequently, because since I am working from home, right, so there may be technical defects. So that's what I am asking. I really appreciate Dishan Fernando. Can you just tell me, can you hear me?
Yes, sir.
Okay, right, fine. Suranga. Right, up to gross profit level, I think it's okay. So after that, you will have to read the other adjustments of the question, right? Excel sheets. Then we'll read the question. The other, now we have already tackled this adjustment A. Then the depreciation, building, office equipment, and furniture. Right, that comes in the balance sheet part. So this is the balance sheet. Balance sheet as at this 31st March 2020, right? That also rupees. Right? So this is important. Trading profit and account, we just give to cover a particular period. So that is why trading P&L account for the year ended this. But the balance sheet as at a particular date. Balance sheet as at this on this particular date. Right? So then here what are the fixed assets? Building, office equipment, furniture and fittings. Furniture and fittings, right? Cost is given here. Yeah. No. Buildings, cost is this one. Office equipment cost is furniture and fittings cost is. These are the cost. So then the depreciation provision of the buildings is, as at the trial balance date, depreciation provision is 12,600. This one 24,800. This one 26,000. But for this, we will have to add the current year depreciation, right? We are asked to depreciate building by 3%. So therefore, this plus 12,600 plus from the cost of buildings 3%. It comes to 54,750. That means current year the depreciation provided up to that point plus from the current year depreciation is 3% from 3% from the cost of the building. That means 1,405,000. So then we get 54,750. In the same way, here the depreciation is this is the depreciation up to the balance sheet date. Plus from this, what is the depreciation rate? 10%. And that is 39,800. In the same way here, furniture and fittings already provided this much plus from the office equipment depreciation rate is 5%. 5%. This is the depreciation provision. Okay, right. So then the net value is this minus provision. Right. Right. Okay. This is the building's value. So then we have depreciated these things. Now we will have to take this into the P&L also. Administration expense, buildings depreciation comes under administration expense. Depreciation on buildings, depreciation on office equipment, depreciation on furniture. Right. That is depreciation on building is 3% from this. Depreciation on office equipment is 10% of this. Depreciation on furniture is 5% of this. These are the depreciation on 42,150, 15,000, 6,250. Now we have completed this adjustment A, adjustment B, adjustment C, and adjustment D also. Then it is said legal expenses 1,500 are to be provided, right? So that means this 1,500 has not been paid yet, right? So therefore we'll have to add the legal expenses. Legal expenses. This is the amount which is given in the trial balance. How much? No trial balance, no legal expense, right? So that means we'll have to. So this is the total legal expense, 1,500. Legal expense 1,500. At the same time, we'll have to show this as a current liability, right? This is non-current assets. So it's better if we can just show this as a non. So we'll have to give that heading. Okay, here you will have to write the non-current assets. Then current assets, current assets. Current assets. Then current liabilities. Under current liabilities, legal expenses, payable, that means that has not been paid yet, right? So that means legal expenses payable, how much? 1,500. $1,500. Then the other one is, other payable amount is bonus to the staff, 40,000. That also under bonus. That is 40,000. Then it comes as a current liability, bonus to the staff. That also the same amount, 40,000. Right. So then now we have finished that adjustment also. Right. Yeah. Now you can move to the other one. Bad debts for the year 1,100 is to be written off, and the provision should be made at 2% from the year-end debtors. Right. Under current assets, debtors, figure is there. Under current assets, debtors is 225,480. Then bad debt provision, is, we'll have to deduct 1,100. We'll have to deduct, otherwise we can do in this way. So then it's more bad debt, written off minus 1,100. Then bad debt provision, is 2%, right? 2% from this plus this. This is the bad debt provision. That's also a minus figure, 4,488, right? So then net debtors value is total of these three. Net debtors value is 219,892. That is the net debtors value. Right. Now, bad debt provision. Right. So then that we'll have to take it to the as the selling and distribution expenses. Selling and distribution expense. Right. Under selling and distribution expense. Bad debt is this 2,100, 1,100 plus 4,488, 5,588, 5,588. Right, this is bad debts. So that means we have done that. We have tackled that adjustment also. Then that's all. We have tackled all the adjustments. Now we'll have to go through the trial balance. Capital account 1,130. So we'll have to write here. Financed by stated capital, that is $1,630, right? Then retained earnings, that means the P&L balance. Right, so we are not balanced that yet, right? So, right. Capital account, buildings, office equipment, furniture, stocks, cash at bank, and cash in hand, right? That should come under the cash in hand. Cash in hand balance is cash in hand 55,200. Cash at bank is 323,700, right? We have taken that also. Cash at bank, cash in hand, debtors we took, creditors under current liability. Creditors balance is yeah 164,300. That also we took now. Debtors, creditors, provisions we took. Drawings made in cash 48,000. Drawings in cash. You'll have to deduct that. Minus 48,000. Right. In the same way, drawings in goods. Drawings in goods is 40,000. 40,000. Drawings in goods is 40,000. Right. Suranga. Right. Drawings in good 40,000. Drawings in goods 40,000. Right. Now you put the other figures and see whether the balance sheet is balanced. Quickly do the balance part. Put the other figures and see whether the balance sheet is balanced. Drawings in cash, salaries. Without waiting for me, please continue. Right, salaries. No adjustment for the salaries. Same amount. Advertising. No adjustment. Same amount. Electricity. No adjustments. Same amount. Telephone, no adjustments. Bank charges, that comes under the finance expense. Finance expense. Heading should be finance expense, right? Bank charges. Bank charges is 12,500. Bank charges, carriage inward we took, purchases we took, sales we took, bank interest. Bank interest 12,500. Now we have taken everything from the trial balance, and we have covered all the adjustments also. Now you will have to finalize the figures, right? So then here the total administration expenses. Something wrong in my this mouse, that's the case. $784,100. Here the balance is. Here the total is. $968,000. Then we get a net profit of $505,992. That's the net profit. Right. Now you can balance the balance sheet. Please do the balance sheet part. You will have to take this net profit also here, retained earnings, this one. Now the balance sheet should be balanced, right? Current asset comes to current asset total. So under current assets, we have not written the stocks, right? We'll have to write the stocks also. We have not shown the stocks. Stocks value is this plus goods in transit, 5,000. Then the total of this is total current asset is right. So then the total assets is $2,253,792. Right, from that we'll have to deduct the creditors. We'll have to deduct the creditors. Minus $205,800. So then you get the balance. The total 2,47,992. Here the balance is also 2,47,992. The balance sheet is balanced. Balance sheet is balanced, right? So please raise your questions if you have any questions. Are you okay with that? Anything you need for me to explain? Right? So if no any questions, we can move to the next question, right? Yeah. Please let me know whether you have any questions in that regard. Miss Avantika, can you please let me know? Are you okay with that question, or do you have any question? Is it okay? Okay, okay, right. Thank you very much. We'll move to the next question. We'll move to the next question. You try to work out the next question. Now, please try to work out the next question quickly. I'll give you 10 minutes. Cinta. अब एक्सेल फीचर देने का मतलब है Right. Question number 2. So that's also a similar question, right? So I think by considering the time, right? So after doing the question number 2, we will move into the other questions, right? The investment appraisal or the ratio analysis, right? So therefore, I'll give you the time till 10:40. So sorry, 2:40. Please work out the question number 2. Please follow the steps I told you. Read the question carefully and try to get what the examiner wants you to do, right? Then read this adjustment carefully, and after that start adjustment one by one and try to do in that way. Question number 2, right? Okay, we'll try to start the question. Closing stock is given, so therefore here sales. Since you read the question, you just let me know whether there are sales return. Yeah, there is sales return. Therefore, sales return. Right. Sales return figure is 49,650. Right. So that's the sales return figure. Right. So sales, I think no carriage inward. Right. No carriage inward. net sale is 3,510,000. 350 is the net sales. Then cost of sales, next adjustment is closing stock is 97,000. Yeah, so that means opening stocks plus purchases. Don't know whether they are carriage inward or carriage outward. Carriage inward is there. Carriage inward, that is there. Then there are purchase return also, right? Less purchase returns. And not only that, there are drawings in goods also. Drawings in goods also, right? So therefore, opening stock is 156,000, right? Plus purchases is this much. Carriage inward is yeah 5,630. Purchase return is 56,000. That is minus then drawings in goods is given as an adjustment. $43,000. $43,000. Yeah. Then here the total of these four items are 1,276,630, right? Cost of sale, opening stock plus cost of opening stocks plus purchases less closing stocks Closing stocks, that is given in an adjustment. Closing stock adjustment is given in a 97,200, right? Closing stock is 97,200, and at the same time it is said in the question, goods to the value of 15,000 were in transit. So therefore, that also should come under the closing stock. That has not been received by the stores yet, but that amount is also belongs to the company, right? So therefore, total comes to minus these two. And then 12,200. Right, it's a minus figure. Then the cost of sale is 1,320. Right, then we arrive into the gross profit. That is 2,189,690. That's the gross profit. Then administration expense, selling and distribution expense, finance expense, right. Uh, Now we have tackled the first adjustment. Now we'll have to do the depreciation. Buildings 2%, the balance sheet, non-current assets, under non-current assets, buildings, office equipment, furniture, furniture, right? Buildings 2,500,000. Buildings 2,500,000. Office equipments 350,000. Furniture this much, right? Now we'll have to make the provisions. Depreciation on building, depreciation on office equipment, furniture. Right? Buildings depreciation is 2% from this figure. $50,000. Buildings depreciation 50,000. Office equipment depreciation is 10% of this. Furniture depreciation is 5% of this. Then these are the depreciations. So therefore, up to the beginning of the financial year, depreciation provisions made this much. Building this much, 125,600 plus the current year depreciation. $50,000. That is the total depreciation provision now. So here this much plus the current year depreciation. Here $16,500 plus the current year depreciation. These are the total provisions. Right. Now we can calculate. So these are the net figures. This minus these are the net figures. Total net asset is, total non-current asset is okay, right? So we have completed that adjustment also. 3,047,000. Yeah, right. So goods for the value 15,000. That also we have already addressed, right? But we are not balance sheet. Then current assets. Current liabilities. Financed by share capital, traded capital, P&L, or retained profit, whatever it is correct, right? Here, Mr. Silla has taken 43 words of good for his personal use. So then from the this thing we'll have to goods, drawings on goods. Drawings on goods. $15,000. Drawings on goods 15,000. I'm sorry, drawings of goods is 43,000. 43,000. 43,000. Oh yeah, here closing stocks. Closing stocks is 97,200. 97,200. To this, we will have to add the goods in transit. Goods in transit is given in the question 15,000. So therefore, the closing stock is the total of these two. Right? Then, yeah, legal expense. Legal expense 1,900. Right? Legal expense 1,900. $16,900. Then bonus to the staff. So this is a little bit tricky adjustment. Bonus to the staff. It's given in the question. It's given after charging the bonus also 5%, right? So therefore, we leave this for the time being. We'll do that at the end, right? Electricity bills. Electricity bills. Here, electricity bills 90,000 plus 7,500. These are the values, right? So then we'll have to show those things as current liabilities, legal expense, bonus payable, electricity bills. Payables, right? Those amounts are legal expenses payable amount is 1,900. Bonus up to now we don't know, right? Electricity bills payable is 7,500. So we leave the bonus for the time being till we complete all the other adjustments, right? Then advertising expense 9,000 has been paid for advertising in advance, right? Here, advertising expense. In the question, advertising expenses, in the question, advertising expenses 89,000, right? But in the adjustment, it says advertising expense 9,000 has been paid in advance. So that means this 89,000 is not the, out of this 89,000, there is 9,000 paid for the next financial year also, right? So therefore advertising expense applicable to this financial year is not 89,000. From that, we will have to deduct the advertising expense paid for the next financial year. So therefore, advertising expense is not 89,000, it is just 80,000, right? So at the same time, we'll have to write the advertising expense paid in advance. How much? That is 9,000. That's a current assets. Right? Next one, bad debts. 2,000 to be written off like that, like in the last one, right? Bad debtors. Debtors value is 230,000. Out of this, we'll have to write off written off how much? 2,000 to be written off, right? 2,000 to be written off. When we get the debtors balance, after writing off this thing, we get the debtors balance. $228,000. From this, we will have to make a provision 2% provision. From this 2%. right? So therefore, bad debt is real bad debt is 223,400. 203. %2 from the year-end debtors. $223,400. Okay. So therefore, here advertising expense, then bad debts, is 2,000 already written off plus 4,560. 4,560. 6,560 bad debt expense. Right? Now, yeah, now we have tackled all the all the adjustments. Now we'll have to do the balance part. Please try to, because I have already taught you this 5% after making the bonus. Right? Try to do that adjustment. Try to do this adjustment. I'll give you 2 minutes. Right? Please try to do that adjustment. You all don't have any questions now, so that I'm just, since there is no any response from you, I'll assume that no problems to you all, right? If there's any problem, please raise that question. Miss Devani, do you have any questions? So you are okay? Please respond, Miss Devani. Are you okay? Have you understood everything? Please respond. Mr. Dishan, are you okay?
Okay, sir.
Okay, then, right, good. Right. So here, now we can just go from the beginning of the question, capital account we took. No, capital account, that is $2,540,000, right? buildings we took, office equipment we took, furniture we took, provision we took, opening stock we took, debtors we took, creditors. Creditors we didn't take yet. Creditors, creditors, balances, creditors 71,000. Then provision for bad debts we took, drawings made in cash 35,000. I think we didn't do, yeah, we drawings made in cash. Drawings made in cash minus drawings made in cash. This much. Salaries. 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 This much. At the same time, we do not know the exact amount up to now, right? But we can just write down bonus. But we don't know the figures yet. Right? Bonus to the staff. Next one. Legal expense we took, advertising we took, electricity. Electricity we took. Telephone we didn't take it, no? Telephone. Telephone 15,600. Bank charges. Bank charges. $47,890. Carriage inward we took, purchase return, sales return, cash at bank. Cash at bank, bank balance, $25,000. Cash balance, that's all. Yeah. Yeah, now we have taken everything. Now we'll have to just do that bonus to be paid, right? So here you can you get the, so what is the profit without the bonus? How much is the profit, right? Without the bonus, profit is administration expense without the bonus. There is bonus to the staff at two places, right? So therefore here, that's why it came a minus. One million 195,725 without the bonus, right? This one selling and distribution total is selling and distribution. It is 6,500. Finance expense total, there is just only one. Right, this much. So therefore, net profit, net profit net profit without the bonus is net profit without the bonus is 859,515. Net profit without the bonus is 809,059,515. Question says bonus is 5% after charging bonus. Now it's like this, right? We'll say net profit is 100, bonus is 5. Bonus is 5. So after charging this 5, bonus net profit is 100. So therefore, before charging the bonus, net profit should be 105. So I have explained a similar question to you, right? After charging, now it's like this. So then this should be 105 minus 5 minus 5, net profit 100. So this is how it should be. I'll show you. I'll explain you here, right? Bonus should be 100, right? Sorry, net profit should be 100, bonus should be 5. So then before charging the here, this is for explaining purpose. Net profit 5, bonus 5, net profit 100. So therefore, in net profit before the bonus should be 105. Now you see here, no? Net profit before the bonus 105, bonus 5, net profit 5. So here question says after charging the bonus 5%. So therefore before charging the bonus 5 out of 105. 5 out of 100 before charging, after charging 5%. Before charging 5 out of 105. So therefore here the bonus should be here 5 out of 105 of this, right? Bonus to the staff should be from this 5% divided by 105. 40,929. So if we give to the closest decimal, that is 40,929. So right. So then this one is, in addition to this, we'll have to add X 81. No, I have made a mistake, no? Bonus to the here. This is a circular reference, no? Oh, right. Net profit comes to 760, 1,646. Here you put net profit, P&L. Now you try to balance this. Current assets, Current asset total is this plus, this plus, this plus, this plus, this. Some problem in my mouse, that's my the reason. So I'll have to just add one by one. Nah? Here minus 80,400. And the total comes to 3,341,000. I don't know. Sometimes there may be a small this thing because I will see whether it's balanced. $3,223,646. There's a small difference. Can somebody just tell me where we have gone wrong? Non-current asset 3,047,000. Right. Current assets 374,000. $228,000. $374,840. 20,000 difference. Right, okay. Current liabilities, legal expense. Yeah, here bonus payable. Bonus payable. Bonus payable. How much? 97,869. That also we'll have to consider. Then this comes to this is minus this plus this plus this plus this 3,223,000 3,243,646. Here 3,223,646. What is that difference? 20 million. PNL 761. Can somebody tell me where we went wrong? Yeah, okay. There is a small difference of I think that may be a arithmetical mistake, right? If somebody can help me by just somebody just detected that thing, please tell me, right? Otherwise, we will move into the next question. Right. Has somebody detected that 20,000? So there cannot be any calculation. So it may be a calculation or addition, mistake in addition, right? So I'll try to just explain that before winding up the session, right? So since we can't waste time, right? We'll move into the next question. So that means question number, not the question number 3. Question number 3 you try to do on your own, right? Question number 4. Question number 4 from ratio analysis. Question number 4 from ratio analysis, right? Ratio analysis, I would like to just refresh your memory again, right? Here, first one, it is asked the GP ratio. We know the GP ratio is word itself gives the meaning gross profit ratio. That means gross profit divided by the turnover. Inventory turnover period, right? Inventory turnover period is, I have given you the formula, right? If we give that in dates, 365 multiplied by average inventory divided by cost of sale. Debt collection period is also, if we give in days, 365 multiplied by average debtors divided by credit sales. Interest cover, ROC, like that. Now, please try to, I'll give you the time till, now it is 3:29. I'll give you the time till 3:40. Right? Please try to work out these answers. Here it is said relevant ratio. Here you are asked to calculate these ratios, these 5 ratios, and after that is given relevant ratios of another company in similar industries like this. Now here we'll say that is 25%. Here if in this company ratio is 5%, there is some problem, right? So then we can say the marketing division is not that strong. So that is why the similar it's like this. We will say Taj Samudra gross profit ratio is 25%. If we take Galadari, gross profit ratio is 2%. So then we can say there is some weaknesses in the marketing division of Kaladar, like that. Inventory period is inventory turnover period in this company. We'll say Food City is 15 days, right? Inventory turnover period in Cargill's is we'll say 45 days. So then something wrong in the sales division in the Cargills. So actually the best is have a shorter inventory period, have a shorter debt collection period, like that. Like that now, firstly you just compute these ratios, please. Right, then I'll explain. By 345, if somebody wants to get an interval also, he can take. Otherwise, you just compute these 5 ratios quickly. Yeah, this is the mistake, right? Can you just move to the question what we completed little while ago, right? The balance sheet was not balanced by 20,000, no? So that mistake is this. Here, the debtors is 230,000, bad debt written off 2,000, then 228,000, bad debt provision is just 2% from the debtors, 2% from the debtors is 4,560. But at the same time, in the trial balance also, there is a bad debt provision of already bad debt provision of 20,000. This one, right? We have ignored it. So therefore, to this we will have to add the 20,000 also. We will have to add for this. We will have to add 20,000 also. That means what is in the trial balance plus 20,000. When we get this one, now the balance sheet should be balanced. 323,646, right? $228. Yeah, it's balanced. 3,223,646, 3,223,646. The mistake I did was, right? I have by mistakenly I have not considered the bad debt already provided 20,000, which is given here. Here, provision for bad debts 20,000. I have ignored, right? So then that matter is okay, right? Please see this question. You'll have to calculate the GP ratio, inventory turnover period, debtors turnover ratio. Quickly calculate. Please do this fast because we have another two more questions to be done. Right? GP ratio is GP ratio, then inventory turnover period. GP ratio is GP divided by turnover. I have given you all these ratios, formulas. Inventory turnover is, if we give in days, 365 multiply average inventory divided by, I have given the formulas, cost of sales. Next one is debt collection period. That is 365 multiplied by average debtors divided by credit sales. Interest cover. Interest cover is PBIT, profit before interest and tax, divided by total interest. ROC. ROC is PBIT, profit before interest and tax. divided by total capital. That means equity capital plus loan capital. These are the formulas. Now, please quickly calculate. Since I have given the formulas, right, I am expecting you to calculate the figures, please. Can somebody give me what the GP ratio is? GP ratio is what? As a percentage? I really appreciate these, my dear little friends, right? Can you just tell me, can Avanti Lakshani tell me what is the GP ratio? Can she respond, please? Avanti Lakshani? What's the GP ratio? Can somebody give me the GP ratio? Who has calculated? Yeah, you all can hear me, no? Huh? Can you all hear me?
Yes, sir.
Right. What is the GP ratio? Can you please tell me GP ratio?
38.46.
That's right. Very good. Very good. See, 38.46. That means gross profit of this company divided by turnover. Turnover is this. Since we give this as a percentage, multiply this by 100, right? So then we get 38.46154. If we give this to the up to the 2 decimals, 38.46%. Right. Then inventory turnover in days. Right. I have explained you. So if it is asked inventory turnover, that is cost of sale divided by average inventory. Right. Inventory turnover is cost of sale divided by average inventory. But if it is asked the period, then 365, it is the bottom of the line goes to the top of the line, the other comes to the bottom line, right? So then here the answer is 365 multiplied by average inventory. In this question, inventory is given 800 plus 540. Then the average is 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 . 800,000 plus 540 divided by, we will have to get average, no, divided by 2, right? So then this is the one. 365 divided by average inventory divided by cost of sales. Cost of sale is 4 million. That means 61 days. 61 in days, it is 61 days. 61 days. Please, if somebody has even a minor question, please raise that. You are free to raise that question. Okay, without just moving to the other part, because this is the last lecture, right? After that, you are getting the examination. I'm telling again the questions are very much similar to the questions what we did in the class, right? So therefore, if you can't understand anything, please let me know, since today is the last day, right? 365 into average debtors. Average debtors, here is given the debtors opening 380,000, closing 320,000. To get the average, divide by 2. Divide by credit sales. Here in the question, the credit sales is given as 4,200,000. Directly given the credit sales. Right? So therefore, our answer is 30.41 days. If we give into the 30 days. 30 days. Right? Then interest cover. PBIT. PBIT means profit before interest and tax. Here, profit before tax is 1,020,000, right? Interest is 280,000. So therefore, profit before interest and tax is this plus this. That means 1,020 plus, since it is a minus figure, I'll have to just this one. How much? 1,300,000. Yeah, you see, after deducting 280, that means after the interest, but before the tax, profit is 1,020,000. So therefore, to get before interest, we have to add this 280. Then we will end up with 1,300,000 divided by total interest. Total interest is 280,000. Right? Profit before interest tax and tax. we get 4.64 times interest cover, 4.64 times, or to the closest decimal figure we can give 4.6. Right, I have given my phone number. Again, I am just reminding you the phone number 07777448537. Right, if you have any problem and if you think that now, so then if you can't answer directly from this thing, right, you can just call my mobile now or send a SMS to mobile, right? So because I just want to get your questions, that's why I'm just giving the phone number and requesting you to call. You can directly raise the question from this this site also, or otherwise phone or somebody sending a SMS, any of those things. Okay, right. The interest cover means according to the present profit, right? Uh, profit. No, the interest what you are paying now, right? If you need, you can pay 4.64 times of the present interest from the present profit. That means if you want from the present profit is enough to pay 4.64 times of interest, right? So that's the meaning of that. Then ROCE. So we'll say the interest cover, if you couldn't understand, I'll tell you, right? So that means we'll say you are spending, we'll say 500 rupees to see the movies. 500 rupees to see the movies, right? Your salary is 2000 rupees. So that means your to cover the from the present salary, you can see 4 times movies. You can spend money for 4 times to see the movies. That's why, right? Interest cover is also like that. Present so from the present profit, you can meet 4.64 times of the interest. That's the meaning of that. ROCE is PBIT. We know the PBIT, that is profit before interest and tax. This plus 280,000. Now this is the PBIT divided by total capital, right? Here, yeah, capital employed 2.8 million. 2.8 million. $2.8 million plus, so that is the stated capital, no? Borrowing capital 1.2 million. Right? So this is the ROCE. This one multiply by, because since we give this as a percentage, I think I would have made a mistake. Please see again. All right. because I have worked out the question before starting this lecture, right? I got at that time 52%. You see where I went wrong, right? 2,800,000 PBIT. PBIT is 1,020,000 plus 280,000 into correct. Sorry. I have taken the closing balance at the beginning of the period, right, under 2019. But I will have to take not that, right? Capital employed 2,200,000. 2,200,000 plus 300,000. Then we get 52 days, 52 times. Now these are the ratios of the company. These are the ratios of the company. So in the question it says in a similar company, GP ratio is 25%. This is 25%. Right? In our case, 38%. In a similar company, that is, we say 25%. In a similar company, inventory turnover period is 15 days. This is 15 days in a similar company. But our one is this, right? Then in a similar company, debt collection period is also 15 days. This is also 15 days. But our one is 30 days. Interest cover in a similar company is 12 times. Our one is 4.64 times. ROCE in a similar company is 55%. ROCE is as a percentage, no? Yeah, not times, as a percentage. Now look at these and try to compare, right? This is this black, given under black color is our one, given under shaded by yellow color are in a similar companies. What do you think? GP ratio is similar company is 29%, our is 38.46, right? Now please respond for this. I need your response because otherwise I don't know whether you understood or not. So which our company is better than better than the other company, so worse than? What do you think? Please respond. Similar company is 25%, our company 38.46. We are better than the other, so the other way. Can somebody please respond? Can somebody respond, please? Our company 38%, similar the other company is 25%. Are we okay or no? Are we better than the others or no?
Yes, better than other company.
Yeah, very good, right. In the same way, inventory turnover, our company 61 days, but the other company is 15 days. So what is the picture that you are getting? Our company is BCO, the other company is BC. Because other company in inventory turnover 15 days. That means in each 15 days, inventory is converted into the sales. But in our company, it takes 61 days to convert the inventory into sales. Right? So that shows what? Which company is the busier? Our one or the other companies?
Other company.
Very good, very good. That means within the shorter period, they convert the inventory into the sales. But our company, we take 2 months to convert into the sales. So therefore, the credit should goes to the no. So then not the credit, right? Discredit should goes to the marketing division. Our marketing division is not that efficient. That's why they take 60 or 2 months to convert the stocks into the sales. But the other companies, they take a small period, right? Just 15 days to convert that into the sales. So that is how. So you are expected to comment, no? So then you have to comment. Our company is our company is below the other companies in the market. Our company is not that efficient as the other companies in the market. But debt collection period, you see, our company it takes 30 days to convert the debts into the cash. Our company takes 30 days. But the other companies, they take just 15 days. That also our company is not the best. Other companies are better than our one. So therefore, again, the discredit should go to the recoveries division. Our company recoveries division is lethargic, right? They take a long time to get the debt collection. That's the reason. Interest cover. That means our company interest cover is 4.64. That means from the available profit, we can take 4.64 times of loans. But other companies, 12 times. That means our company has taken more and more loans, right? So that means that's why we are paying more and more interest, right? So therefore, we can go only 4 times. But the other companies, they can go 12 times, right? ROC, our company 52%, other companies 55%. It's simple. We are below the other companies. Like that, you will have to comment, right? So then that question is also over. We have given another question from the ratios. Since I have done this question in the screen, I'm expecting from you to calculate quickly without taking much time. There are 3, 6, 9, 10, 13 ratios, right? 13 ratios maximum. Within 15 minutes, you can compute. That means 418, right? By 418, please come out with the answer. After that, I'll start doing the question. 418. I'll start doing 418. Before that, please work out. Hmm. Right. Earning per share, I have given the formula also, right? Profit attributable to the ordinary shareholders. In this question, right, profit attributable to the ordinary shareholders is what? right? Profit attributable to the ordinary shareholders is not this 23,900, because ordinary shareholders are getting after making the tax payment also. That means 15,000 divided by number of shares. The examiner should give you the number of shares. Here it's not given the number of shares, so therefore you will have to make an assumption. Otherwise, normally so then since this question is prepared by me, I may have forgotten it, right? So you consider the share, the nominal value of a share is 10 rupees. So therefore the number of shares is 9,400. So we are, yeah, 2020, no, 9,480. 9,480. Yeah. Earning per share is 1 rupees and 58 cents. So that means per share earnings net profit is 1 rupees and 58 cents, right? ROCE, PBIT, profit before interest and tax. Profit before tax is 23,900. Before interest and taxes, we will have to add the finance cost 1,000 rupees. This is the profit before interest and tax divided by equity. Equity is the share capital, right? The stated capital. That means the general reserves and the retained total equity is 139,750. 139,750 plus loan capital. Here, non-current liability, bank loan 9,500, right? So that is also capital, but it's a loan capital. So we'll have to add 9,500 also. So then this is the ROCE. Normally we give ROCE as a percentage. So therefore it's better to multiply this by 100. So then we get 16.68%. You see whether my answer is correct? Profit before interest and tax. Profit before interest and tax is 24,900. 24,900. Equities 139,750 plus loan capital 9,500. Yes, correct, no? %16.68%. Right. PE ratio. PE ratio is market price per share. In the question is given the market price. 24. 24 divided by earning per share. We have already calculated. PE ratio is 15.168 times. Stock turnover ratio is cost of sales is divided by average stocks. This plus this divided by 2. $5.83 times. I'm sorry, no, cost of sale is not that one, no. Cost of sale is 165,000. It's 210. It's minus, no. 18.333 times. Stock turnover ratio is this. So that's what I am explaining. I want to explain this again. Stock turnover period, you see the formula. Cost of sale divided by average stocks. Stock turnover period. So this is turned to the other side. 365. This average stock comes to the top. Cost of sale goes to the down. Right? So that means 365 multiplied by average stocks. Divided by cost of sale, 165,000. Twenty days. 20 days. Debtors turnover ratio. Credit sales. Here sales is given as 217,500. Out of that, credit sale is given as 80%. Right? 80%. This is the credit sales. Divided by average creditors. Average creditors. It's given here creditors. Here 9,375 plus this divided by 2, that is the average creditors. Debtors ratio 11 point why credit sales 217,000 H 209 into 80% divided by average creditors. E 242 debtors. Sorry, average debtors, huh? Yeah, average debtors. E 242. Sorry, average debtors, no, not this one. I made a mistake. E 227 plus E 227. I have taken the creditors, right? $11.96, right? 11.96. Then the debt collection period is, if you want, you can just mention 365 multiply by credit sales multiply by average debtors divided by credit sales. Or otherwise, what you could do is, right, 365 divided by debtors ratio, right? So then also you are getting the same answer, right? $31 days, right? To understand that, no? Here, debt collection period is 365 multiplied by average debtors. That means this one divided by credit sales. That means 365 divided. So we will take here 365 divided by. I am just trying to explain this to you, right? $365 divided by 365 divided by sorry, here. Yeah, 365 divided by debt collection period, right? This is the right. So then when we expand this, 365 divided by debt collection period is debtors ratio is credit sales divided by average debtors. Right? Same thing. So 365 divided by these things. That means 365 multiplied by average debtors, right? Divided by credit. So that means 365 divided by debtors turnover ratio. That's why 31 days. If you want, you can use this formula, or otherwise you can directly divide this by debtors ratio. The same answer you are getting now. Creditors ratio. I have given the formula. That means credit purchases here the purchases is not given. Here the cost of sale is given. Right? Here the cost of sale is given. We know the cost of sale is opening stocks plus purchases minus closing stocks. This is the formula for the cost of sale, right? But here we need not the cost of sale, purchases. Then to get the purchases, what we could do is here, therefore the purchases is equal cost of sale minus opening stocks plus closing stocks. Now, in most of the time, examiners, without giving directly the cost of sale, without directly giving the purchases, they just give the cost of sale. So therefore, you should be in a position to get the purchases from the cost of sale when the opening stock and the closing stock is available, right? So therefore, we know credit purchases is, we know the purchases is opening stocks. That means this plus credit purchases. Cost of sale, no, sorry. Credit purchase is opening stocks. Yeah. This, before that, cost of sale, no? Cost of sale, 165,000. 165,000 is the cost of sale minus opening stocks. This one plus closing stocks. This is the total purchases. Out of that, credit purchases is 75%. From this, 75%, right? So that is the We'll have to divide this by average creditors. Average creditors is this plus this divided by 2. This is the answer. 8.86. 8.86 creditors ratio is 8.86. Here it is asked the creditor settlement period. So to make it simple, 365 divided by creditors ratio. 41 days. Then current ratio is straightforward. Current assets divided by current liabilities. Quick asset ratio, a subdivision of that current assets minus stocks, 8,700 divided by current liabilities. That means I told you, no, current ratio is current assets divided by current liabilities. Fixed asset ratio is, out of these current assets, these are the items included in the current assets: stock, debtors, other current assets, cash. Now, the most difficult item for converting into cash is stocks, right? So therefore, quick assets. Therefore, we deduct the stocks. That's what happened. GP ratio is a straightforward this one divided by sales. Normally we give this as a percentage. This one multiply by this, then we get as a percentage, it is this 24.14. Right, okay. NP ratio, NP over turnover. Here net profit is this one 23,900, right? It's not a big mistake even you take profit after tax, right? But the management is not responsible for the tax, right? So that is a statutory requirement that is decided by the Inland Revenue, right? So therefore, normally when we calculate the net profit ratio, it's better to consider net profit before tax. 23,900 divided by turnover. Here multiply by 100. So 10.11%. It's not a very big mistake even you take profit after tax. So that is what. So that's the end of the ratio analysis study, right? So therefore, before moving into the, so we have another 2 questions from the investment appraisal, right? Before moving into those 2 questions, please tell me if you have any doubt. Please tell me. If there now, please don't go ahead with doubts, right? If you have any doubts in any of the ratios, since this is the last session in ratios, I'm just making a requesting from you all to just to come out with if you have any doubts. If everything is okay, you have understood clearly. Okay, then we will move into the next question. There you are asked to calculate. There it is mentioned. Now this no PLC wants to buy a new item of equipment. We'll say a company wants to buy a car, right? So they have taken they have considered the cost of the car, then the service expenses, the other OL, right? Repairs and that type of things. These also things like that. So they want to buy an equipment. Cost capital cost of the investment is in equipment X is 300,000, equipment Y 125,000. Duration of both equipments are 5 years. The profit after depreciation here is given after depreciation. So therefore, you will have to convert this. We know in investment appraisal we don't want this profit after depreciation. What we need is the cash flow. Therefore, you will have to convert this profit after depreciation into cash flow first, right? Then only you can. Please, I'll give you time till 5:10, right? Please try to work out. Right. Equipment X, equipment Y. Cost is 300, 125. Disposal value is 0. So therefore, the net value is 300,000 minus 0. That means 300,000. Lifetime 5 years. Right, both 5 years. So therefore, the depreciation of equipment X is 60,000, equipment Y is 25,000. So therefore, we are calculating the NPV of equipment X. Right? This is equipment X. %, this is year 0, like this. Profit is this, depreciation is this, therefore cash flow is this. This 300,000 is the initial investment. That means this one, right? At the year 0, company has to spend this, right? So then when we discount 1, 0.909, 0.826, 0.751, 0.683, 0.621. Right, so this is 10% discounting factor. Then the present values are cash flow multiplied by discounting factor, right? So then NPV is $128,945 in equipment X. In equipment Y, and to save time, I am copying the entire thing here. And I am going to do the changes. Right, profit is not 40,000 in equipment Y, 78,000. 56,500, 25,800, 65,900, 63,900. Right. Depreciation is also 25,000. Right. Then cash flow cost is 125,000. These are right. These are the addition of these two columns. Right. So then this is the here. This is the NPV of equipment X at 10% discounting factor. Right. Here the NPV of equipment Y at 10% discounting factor, right? So therefore, by looking at these two, right, both gives positive NPV net present value. So therefore, both equipments are acceptable. But since equipment Y give a higher NPV, we advise the management to go for the equipment Y. That's the answer for that question. If there is anything, is there any doubt? Please raise that question now. Before moving into the last question, I really appreciate if you solve your doubts, please raise. If you have any questions, please raise. Miss Yasodhya, are you okay or you have any doubts? Or you understood very well? Please respond. Have you understood or not? I assume that the silence shows that she has understood well, right? But doesn't matter. If you have any doubt, please raise that. Okay, then. Thank you very much, Yasodhya. Okay, right. Right. I can, without any hassle, I can just move into the next question since I got the response. Right. Please read the question number 7 carefully. Right. Question number 7 carefully. There it is asked to calculate the IRR. To calculate IRR, we know the IRR. To calculate IRR, you have to calculate the NPVs, right? NPVs by taking two different cost of discounting factors, right? The meaning of IRR is the discounting factor which NPV reaches to 0, right? So therefore, we'll have to get two discounting factors and calculate the NPVs. After that, that's a small calculation, small computation. We can get the what do you call this, IRR. I request you to calculate the present values by considering 7% discounting factor and 15% discounting factor. I'll give you the discounting rates under both. Year 0, right, under 7%, 1, 0.935, 0.837, sorry, 873, 0.873, 0.816, 0.763, 0.713. These are the discounting factors. So you also can get this from the discounting table, or otherwise for your easy reference, I have given the discounting factors. 0.870, 0.756, 0.658, 0.572, 0.497. And these are the discounting factors. So I request you to just take these two discounting factors, because then only you get one present value as a negative figure and the other present value as a positive figure. So there is no any requirement of getting the present values in two different positive and negative, but to get an accurate answer, right, is easy if you get negative PV and a positive PV, right? So therefore, please quickly compute the NPV under 7%, and you let me know NPV at discounting factor 7% and NPV at discounting factor 15%. Right? I'll give you the time till, right, time till 5:20. Right? Please work out. I'll give you the time till 5:20. I'm not going to work out the NPV under 7% and 15%. You give me the figures. I'll explain you the IRR only. Okay, quickly do it. You have enough time, right? Right now, please compute the two NPVs. Now, in this question, right, the is given under each year, not the profit. In the previous question, the profit given details are the profit. So that is why we had to convert into the cash flow. But in this question, so those are the tricky points in these questions, right? In this question, not the profit, directly the cash flows are given, right? So therefore, it's easy for you, right? No need to calculate the depreciation. You can directly calculate the discounting factors. No, present values. to year 5. So this place also you will have to keep in your mind. Year 5 is the last year. So therefore, we will have to add the disposal value of the asset also. That means to the cash flow of year 5, we will have to add the disposal value of 8,000 because we are selling the scrap, the asset as a scrap in the year 5. So therefore, real cash flow in the year 5 is not 24,000, 24,000 plus 8,000. Okay. Then 7% discounting factor. Then PV at 7% discounting factor is this multiplied by this. %15 discounting factors. Right? PV at 15% discounting factor. Cash flow multiply by this 15% discounting factor. Minus 340 minus 34,973. Right. Has everybody got these two NPVs? There may be slight differences, right? That is according to the decimal figures, but there can't be any material differences, right? I hope all have got these two PVs. If somebody has not, if there is any difficulty of getting the PVs for somebody, please raise that question now. I will explain it. Okay. Time is up. So we'll see how to calculate the IRR from this. NPV at discounted factor 7 is 31,242. At 15% is minus 34,973. So what is the difference of NPV? Is the I'll explain this to you. We'll say here we'll say minus 2, minus 1, 0, plus 1, plus 2, plus 3, right? So difference between this minus 2 and plus 3 is the total of this 2 and 3, 5. Right? I hope you can understand. Right? Difference is minus 2 and plus 3 is 5. Difference of between minus 1 and plus 3 is 4. Right? But the difference in but the difference in 1 and 3 is 2. Difference between 2 and 3 is 1. Difference between minus 2 and plus 3 is 5. Like that, here the difference between these two is the addition of these two, right? That means 31,242 plus 34,973. This is the difference between these two NPVs, right? Therefore, IRR is equal right, lower discounting rate 7% plus 7% plus the discounting factor, the difference, that means 8. 7% and 15% difference is 8%, right? The difference in NPV is 66,215, right? This is divided by this one, right? But to make this to 0, now you understand, from this 312 plus it moves and it will come to minus 349. But to make this to 0, right, we need only 312 242 multiply by 312 O2. That means 7% plus 8 into 312.42 divided by 66 215, 3.7 this thing. So therefore IRR is 10.7, that 10.77%. That means 11%. Give me a little time. Hello? 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 Hello, may I know who is there? Hello? Okay. Right, 10.77, or otherwise we can say 11%. Now you can see, right, when discounting factor 7%, positive 31. When discounting factor 15%, negative 34. Then the NPV becomes to zero in between the 7% and 15%. That means at 11%, right, NPV exactly will become zero, right? So that's the IRR. If anybody has any problem, please raise that question, right? Mr. Dishan, you understood, no? Mr. Dishan, you understood or not?
Yes, sir.
Okay,
I
then. Thank you.
understood.
Yeah, thank you very much. So this is the end of the lesson, the lecture series, right? I'm not too sure when is your examination, right? So if you have any, so I request you to just to do the questions what we did at the lectures, right? If any area is a bit difficult, or if you can't understand a particular area, you are free to call me at 0777 448 537, right? Normally before 12 midnight, right? So if I am at a meeting, I may not answer for you, but just after the meeting, I am responding for responding for all the missed calls, right? Therefore, don't worry. If there's any question, please raise that question, right? This is the end of the lecture series. End of 5 lectures, 20 hours, right? Almost somewhere closer to one full day, right? So thank you very much for just following my lecture series, right? And I wish you all the best for the exam, not only for the examination, for your future also. Okay then, thank you very much.